Yo, good morning, everybody. Welcome, everyone coming over from pre-market prep. I am, of course, Spencer Israel, your host of All Access. Welcome to Benzinga All Access. This is our weekly show where we put aside the charts, we put aside the tickers, we put aside the technicals and the moving averages and the ratios, and we just stop and have conversations, right? We live in operate in this world where we're all moving a million miles a minute, and we sometimes we reduce these companies down to 3 or 4 letters or 3 or 4 different numbers. But I operate under the belief that every company has a story, and that story is interesting. That was the impetus of this show, to go one-on-one with C-suite executives, CEOs, founders, the like, and actually get the story of their company a little bit. Find out, what do you do? Why do you do it? What headwinds are you facing? What tailwinds are at your back? And of course, give you the option to ask questions as well. That's half the fun here on Benzinga All Access. So without further ado, let's roll that intro. This is Benzinga All Access. All right. So, a few housekeeping items to address before I bring on our first guest here. First things first, Benzinga All Access is a paid show. What does that mean? It means all the companies that are appearing on this show have paid Benzinga to be here. However, they do not know what we're going to talk about. I have not given them questions. You know why? Because oftentimes, I don't even know what I'm going to ask. I don't have questions. It's not my style to write out questions ahead of time. I've got some notes, I've got some slides, but I have things. It's all in my head. So whatever comes out, comes out. So they don't know what we're going to ask. They don't know what you're going to ask. As I said, half the battle here is giving you the option to ask questions of these executives. So drop your questions in the chat, and I will be your conduit. So that's the first thing. Second thing, smash that like button. Obviously, come on, guys. You got to always smash the like. That's like, rule number one of watching us on Benzinga. And then the third thing is that this show itself is sponsored by a company called Ticker. Ticker is revolutionizing how everyday investors are rewarded for brand loyalty by connecting consumers with the perks for brands that they own. Yes, you can get rewards just for owning a stock. So to see what perks you qualify for, go to ticker.com/Benzinga, TIICKER, ticker.com/Benzinga, or click on the link in the chat. And I believe we have a quick video that explains what Ticker does.
What is Ticker? That's right, Ticker with 2 I's, just like you, because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Again, that URL, I'm going to put up on the screen now, ticker.com/Benzinga. Create your account, okay? Link your brokerage. And once you do that, when you confirm your account in like the email thing, there's a little box there. It says, "Are you from Benzinga?" You check that box, and they will send you a $20 Amazon gift card in 30 days. So again, ticker.com/Benzinga. Get rewarded just for owning shares in the company. Okay, so what's up, everyone in the chat? What's up, Brian? No, Stefan, that's correct. No live trading today. Live trading airs Monday through Thursday. This is our Friday show. Come on, it's Friday. It's time to take a step back for a second, and sometimes this is the day that people will get away ahead of the weekend. That's why volumes tend to be a little bit lower on Fridays. So we have taken this time out every Friday at 9:15 to do All Access, where we just have conversations, spontaneous conversations with founders, with executives of publicly traded companies. So, who is on today's show? Oh, I'm glad you asked that question. So, our first up guest here, I'm going to bring on in a minute here, is Scott Kaufman, CEO of Creek Road Miners. We're going to talk crypto mining, but in a ESG friendly way. We're going to talk payments with Brian Cox from SurgePays. He's their CEO. Then we're going to switch gears. We're going to go away from the stocks, and we're going to talk to Mark Cercos, who is the co-founder and CEO of MetaSoccer NFT. They're doing a very interesting business. If you're familiar with pay to play in the NFT or in the crypto world, MetaSoccer is making waves there. So we're going to talk NFTs and pay to play with Mark. We're going to talk cannabis with Luis Merchant. He's the CEO of Flora Growth. And then we're going to wrap the show up today with just a broad market discussion with Matt Timpane. He is the senior market strategist at Schaeffer's Investment Research. We're going to talk oil. We're going to talk sentiment. We're going to talk macro, micro. So that'll be the wrap up of today's show at what I think we'll do that at like 11 o'clock. I'll bring Matt on. So we got a lot to get to. So without further ado, let's bring on our first guest of the day. I'm already running late. Story of my life. Scott Kaufman, CEO of Creek Road Miners. Let's get him on the show right now. Scott, what is up?
Good morning.
No, Shelly, not different Brian Cox. Not that Brian Cox. Scott, it's been a minute since we spoke. How are we doing? How's life?
Life is great. We are forging ahead on our strategy, trying to work within the new environment that's been created, what's going on globally, but it's an exciting time for Creek.
All right, we're going to talk about how the developments of the past couple of weeks have changed your business, if at all. But before we do that, let's just give people like the background on how Creek Road came into existence, because it's a relatively new story, and you're relatively new to the industry yourself.
No, that's very true. I think that the impetus of the launch of Creek really came from multiple different aspects. I mean, again, I think I'm a unique breed as a CEO. And that I come from more of the money pushing side as a private equity guy and seeing a lot of opportunities in the crypto mining space. But just because you see an opportunity doesn't necessarily mean that you should jump in, because you just don't want to be one of many. And we spend a lot of time at Creek analyzing the industry and tried to find ways to really differentiate ourselves from learning, not necessarily from mistakes that other companies made, but learning from things that they might have done differently going forward. So we spend a lot of time analyzing the industry, analyzing how it is that we can differentiate ourselves. Because again, there obviously are the 800-pound gorillas in the space who have a definitive first mover advantage. So again, in analyzing the industry and seeing opportunities come over our transit from an M&A opportunity, we again developed our objective, which led us to our 5 cornerstone strategies, which again comes from the amount of effort we put into understanding the industry to differentiate ourselves. And that all happened over the summer of last year. We started mining for crypto in October of 2021. And at this point now, we are in our very significant growth stage of course, we've publicly announced that we will be increasing our production at least 7 times this year already, as we are in the embryonic stages of the year, and really looking to deploy our strategy and deliver on our objective.
So let's run through that
Sure.
strategy. I have it up on the screen there. But what is the strategy? As you said, there are a couple of 1,000-pound gorillas in the crypto mining space. When most people think of them, they think of Marathon and think of Riot, maybe 1 or 2 more. So you've come up with this plan that whose objective is to differentiate you in a way. Walk us through that plan.
Sure. And I think the first strategy that we're deploying and looking to deploy is what we call vertical integration. What we feel is that everything from the production of the energy, the source of the energy, all the way through the mining of the cryptocurrency, we want to own the whole operation. We want to own the energy. We want to own the data rooms. We want to own the portfolio. I do come with an oil and gas background as well. So I understand the ability to utilize energy coming from the ground, turning it into for lack of better words, electricity right at our facilities and turn that into turn electricity into money in the data rooms to mine for Bitcoin as we're currently doing today. In fact, this is occurring as we speak on the phone without touching infrastructure. And I think that's one of the key elements. We feel that infrastructure, if you touch infrastructure, you do run the risk of running into situations where your energy might not show up at no fault of your own. You might run into situations where you're asked to reduce the amount of energy you're pulling out of infrastructure as a means of supporting the network. We feel that continuity is a very significant aspect of cryptocurrency mining, and to ensure continuity of operations, if you own the whole process and are not relying on anyone else, you do your best again to solidify the continuity. In conjunction with that, we also feel that the vertical integration aspect of what we're doing enhances profitability. Meaning by that, if you do not have to deal with middlemen, other suppliers who are looking to profit along the way, to those bottom line numbers to your bottom line. Again, by owning the energy company that you're utilizing needs to make a profit, but if it's all vertical integration, that profit goes to our bottom line as well.
So all that sounds great, but it also sounds very cost intensive. Sounds expensive.
No one said Bitcoin mining was cheap. So no, you're right. Look, I think that if you break down the costs associated both from the vertical from the oil and gas side as well as the operations of running the Bitcoin operations, yes, it's an expensive endeavor. I'm sure we've all gone and looked at the pricing of one single Bitcoin miner from Bitmain or whoever, and you are running $10,000, $12,000 today, roughly, for one miner. A megawatt of S19J Pro miners might cost you $2.5–3 million. You need to house these machines. I mean, the infrastructure per 1 megawatt is $3 to $4 million, at least from our experience. And we've seen more and we've seen less. So yes, that's very true. Now, the vertical integration side on the oil and gas side is you can do it from the perspective of just putting your machines and entering into some form of contract with the supplier. But again, that doesn't achieve our goal. So yes, the acquisition of oil and gas operating fields can be expensive. And what's interesting, though, if you have a strong equity and if you have liquid equity and what we're looking to build, the nice thing about being a pubco is you do have the opportunity to utilize your equity as a form of currency as well. So it's expensive, but worth it once you run the numbers.
All right, so let's talk about the vertical integration and owning your own energy usage. Oil and gas, man. I mean, you come from that industry. You see what's happening out there. What is the impact of rising costs on your business right now?
Sure. On the Creek side, we've had a little bit of increase in our natural gas pricing, but it actually hasn't been very minimal. Has been very minimal in terms of an impact to us. I think from an economics perspective, I think where it makes it, there are aspects of it that make it difficult because I think as the price of these commodities increase, the theoretical acquisition price goes up as well. There's an expectation that happens. However, what's also interesting, though, is I think the opportunities are more present than they've been in a very long time. We haven't seen energy prices at these levels in a very long time. And I think that there's some fatigue in the industry, at least we are experiencing that there's some fatigue in the industry, and people are looking to utilize this opportunity as an exit. So it's this delicate balance of finding the right opportunity as well as making sure you don't pay too much for that asset.
Do you hedge, out of curiosity?
Hedge the crypto,
the energy, sorry.
So again, at this point, we are deploying the strategy. Creek Road itself does not own an oil and gas operating entity. Okay. We are currently sitting on one that we have a very related party connection with, but not at this point.
Okay, but in terms of just energy, because one of the cornerstones is energy diversification, right? So
That's correct.
Right, so you were trying to get away from any one source. Are there other sources that you're moving in on right now?
Sure. So there's two components to that. Number one is the diversification of the generation of the electricity. Meaning by that, we'd rather have, let's say, 100 wellheads providing energy as opposed to one massive turbine, hydro plant that has two or three turbines in it, right? Obviously, we can all understand that if one of the turbines goes down, it's pretty significant reduction in your energy as opposed to one of your 100 wells going down.
Yeah.
I think that that's pretty self-explanatory. With regards to the energy itself, yes, of course, we're looking at look, there's solar energy opportunities, there's wind energy opportunities that we are looking at. The hardest thing associated with them is finding one of the size and scale that can produce enough energy to meet the demands of what you're looking for with regards to running a cryptocurrency operation. They're very significant in size.
So, like, how does that work exactly? Do you go out and like acquire a solar field, like a solar panel field, or what?
Well, let me be clear. We haven't done it.
Right.
Okay, so
Right,
I want to be very clear about that. But again, given the backgrounds of myself and more that we have, there's a tremendous amount of opportunities that are coming over the transom in oil and gas, in the renewables energy, in the solar fields. So we are evaluating everything that's coming over the transom. So it's a lot of it's inbound of opportunities that we're seeing.
And what about geography here, right? I want to pull this up about having diversity in your geographic footprint as well. So where are you located, and how will that change?
Sure. So we're currently located in Louisiana. Everyone, and as we've mentioned earlier, we actually have mining operations floating in the bayous of Louisiana, which is always a fun trip to visit the facilities. But you mentioned that, and people always feel, oh, it must be really hot there. And yes, in the summers it's hot, but in the winter
and wet, I imagine.
and wet. But you can actually deal with that. That's actually quite interesting, which we could touch on later. But from a weather perspective, in these winter months, there are freezing issues out in the field. It's very cold. The dampers on our container overnight will almost shut. It's so cold out in the field. Ways to deal with, obviously, the colder, the better, to a point, of course, with regards to the operations. And in the summer months, there's a couple of things. Number one is that we are looking at different cooling technologies, such as immersion, right? Number one. Number two is that summer months, when you get the air running over the cooler water, it actually isn't as hot as you would think. But that's in that one location. Other areas we're looking at, I mean, there's a lot of opportunities we're looking at in the Northeast, and of course the Midwest, northern states, the Midwest, Montana, Idaho, Colorado, Wyoming, where the weather obviously isn't as wet as you mentioned earlier. Also, isn't as hot in the summers. So,
But why are you in Louisiana? Because all like that just seems like you're asking for trouble, you know?
It's funny. People always said that to us, and in some ways,
Okay, good. I'm not the only
first of all,
one.
no. A lot of people ask us that. Well, first of all, it was the path of least resistance. I think when you are looking to see if you can even accomplish what we've accomplished, you want to do it in an environment that you have ease access to. Again, I mentioned there's connection to this oil and gas field, which made it a little bit easier for us to establish our proof of concept. So I think that's number one. And number two, in some ways, it's also because people said we couldn't do it. Right? That's number two. But we were able to do it. So I think that it's a little bit of both.
Where are you at as far as like acquiring miners? I know you bought 160 S19J Pro Bitmain miners. That was last year. Are you planning on acquiring more?
Well, we've publicly announced that we have acquired, from our perspective, a significant amount of miners. And in fact, it's not only did we announce it, I think our schedule was publicly announced, to the extent that, again, we established our proof of concept, which was a 1 megawatt operation towards the end of last year. We have a whole nother megawatt coming online in the next couple of weeks. We'll have an additional 2 megawatts coming on heading into the summer. And then we're very fortunate that we have a strong relationship with Bitmain, and we will be receiving least 100 machines every month starting in July of the XP versions, or the 140 terahash machines. And again, it's all publicly announced. This will increase our processing capabilities as we sit here today over 6 times, which obviously then can translate into a 6x on our revenue multiple, at least this year. So we are on a pretty aggressive growth campaign with regards to our miners.
I don't know if I've ever asked this question before to anyone, so I'll ask you because it just occurred to me. Is there any impact on your ability to acquire miners from the global semiconductor shortage? Does that impact you at all?
Not as of yet. We
Okay.
have not felt it as of yet. Who knows what tomorrow will bring? I mean, for example, I do know that our current delivery of miners have been completed and are in transit. So not as of yet, we haven't felt anything. But again, who knows what tomorrow will bring?
And what do you mine?
So right now, we're just mining Bitcoin.
Is that the plan going forward? Just Bitcoin?
No, it's not. In fact, again, in one of our strategies is that we feel that you do need to have cryptocurrency diversification. It's please don't ask me the question so I don't have to lie, right? we are planning on diversifying our cryptocurrency mining to other currencies beyond that of Bitcoin.
All right. Well, speaking practically here, I mean, Scott, how do you decide, like, what goes into the thought process of, like, okay, we know we want to do something else besides Bitcoin. We have a massive number of cryptos to choose from. How do you go about deciding? Like, what goes into that thought process?
Yeah, absolutely. It's a great question. We feel that this industry is in its embryonic stages, and as we're leaning over the bow of the ship, we obviously understand and watching the topography change. There are some definitive staples, obviously crypto, and it's a different Bitcoin, Bitcoin, which is a different type of crypto, and of course there's Ethereum. As I mentioned, we're only mining Bitcoin, and I think will be understandable where we might be heading next. Beyond that, and as you watch this topography of the industry change, as well as you switch from ASICs to GPUs with your ability to mine other coin, I think eventually there could be a situation where there's a percentage of the amount of cryptocurrency that we're mining, whether it's on a daily basis or weekly basis, can change depending on what coins are in favor at the time. You know, having that flexibility eventually with the proper equipment and offers you the opportunity to mine a cryptocurrency that might be in favor at that period in time. But you have to, again, lean over the bow of the ship and watch the topography change and see which one at that time is maybe in favor. But again, as I mentioned, we are in the beginning stages of our company. We will be going after the staples as we've done Bitcoin already. And yes, leave it at that.
All right. And seeing as how you are early stage, I feel like I should just ask about financing and funding. Are you all good there, or is there going to be a need to raise more down the road?
Yeah, it's a great question. We've been very fortunate to the extent, or fortunate, we at this point have not used any leverage to acquire any of our assets. All the miners that we have purchased at this point have been and will be paid in cash that we have, again, utilized capital markets as a means of raising capital. At this point, we are well funded. We have great investors, very big supporters. I mentioned earlier that it's going to be tough to catch the 800-pound gorilla who did use a lot of leverage. I don't know. It's an interesting question, but at this point, we're capitalized. We're very comfortable with our position, and it's an interesting analysis as a means of achieving our objectives and our goals, and to build what type of company we want to be with regards to how much leverage you take on for these machines. But at this point, there's no leverage on any of the machines. We're a very unlevered company, and we've been using cash to buy them.
Last one here, and then we'll let you run, Scott. But this is a good question from Hot Dog. Yes, the other day, I think it was Wednesday, Jerome Powell was testifying, and he said, he basically asked Congress, he's like, yo, Congress, you guys, I think you should step in here and regulate crypto in some way, shape, or form. How do you feel about that?
You know, crypto was developed as a means of not having that happen to it, right? It's a great question. It's a moral question, right? I mean, if crypto is utilized from at least from my perspective for nefarious reasons, absolutely it needs to be done. But there obviously needs to maintain a level of ambiguity because that's what it was created for. I think it's a fine line. I think it's about moderation, to be brutally honest about the answer, which might be deflecting it. I think a full disclosure of the crypto universe is you'll have migration to another type of classification of some type of cryptocurrency. I think we try to regulate it, people are going to move to another and another and another, right? So I think it's a fine line of making sure that it's used in an appropriate way and not in ones to do nefarious things. And,
right,
and I don't
Scott.
mean to deflect the answer.
No,
It's a definitive.
I think that's a
it's a hard
fair. I think that's a
question.
fair response. That's the thing. I think that's a reasonable take. I think
Yeah.
no regulation is probably out of the question, but also like regulation like other assets is also out of the question. Whatever. All I know is it's going to take a long time to figure this out. Scott Kaufman is the CEO of Creek Road Miners. Scott, always a pleasure. Thanks for coming on All Access today.
Appreciate it. Thank you so much, everyone. Have a
right.
great day.
All right, let's keep it on that topic, okay? We're gonna switch gears a little bit, but we're gonna keep it on the topic of crypto to some extent because I want to bring on our next guest here, Brian Cox, who is the CEO of SurgePays, and they also have exposure to crypto. So in a way, but I'll let Brian explain why. So let's bring Brian Cox on the show right now. There he is, Brian. Good morning. How we doing?
Hey, good morning, man. I'm doing pretty good. It's before 9 o'clock here, so it's not going to be all access with Benzinga. This is coffee with Spencer. So I'm going to go ahead and you go ahead and rename this segment here. How you doing, buddy?
Fair enough. I've been awake for several hours, so it's almost lunchtime for me. But all right, for those who don't know what SurgePays is, I could explain it, but it'd be better coming from your mouth. So just explain, give us like the 10,000 foot view. SurgePays.
Yeah, sure. And I'll finish off with where it sounds like you want to go based on the intro. We're underbanked, underserved markets. We've got two main revenue drivers. Our B2C driver is mobile broadband direct to consumers at their house and their hands through tablets and devices. The B2B is through the convenience stores in the low-income the low-income neighborhoods where the underbanked shop. So we go in and we deploy our platform in the store. The clerk is able to do all kinds of transactions, financial transactions, prepaid transactions, and we convert that store into the tech hub quasi bank for the underbanked neighborhood.
And now how does crypto play into that?
We'll call it more of a digital currency. When I took over as CEO in 2017, back before everybody was talking about crypto, we've been in the fintech side of delivering essential services to the underbanked for almost 20 years. Yeah. And I saw an opportunity, not just from an investment perspective, because the underbanked by definition is not the investment class. I wanted to be one of the people on the forefront of adoption, a real use case of enhancing people's lives on the front lines, like I said, out in the grassroots, making a difference. And we saw it as a great opportunity to get in there and provide people with the means of storing value and transferring value without it being in cash in their pockets.
So you just announced like 2 or 3 weeks ago the ability that you're now enabling people the ability to buy Bitcoin if they want to like buy it at like a local store. They can do that now through SurgePays.
Yes, this is a pretty important step, and especially on the side of the immigrant and remittance. It's unique because I was in El Salvador in November where our operations center is. We've got about a 300-seat operations center down there. And we spoke to a couple of the president's folks. They legalized. They're the first country in the world to legalize Bitcoin as a tender, currency equal with the dollar. Quick high level story. We asked them why, and they said our GDP is almost a third remittance. Family members working their tails off up in the States, sending money back. Oh yeah, no, it's. And they
I did not know it was that high.
It is significant, and well, you remember that the dollar is their legal currency there too. So what they said was, it's actually genius, I thought, and the other countries are catching on. Western Union and all these other remittance companies, MoneyGram, Ria, Segay, are taking about 15% of that transaction, and it scales up as the more you work, the more you pay just to get the money back down to your loved ones. And so what they did They deployed Bitcoin ATMs that are fee-free all over the country. They created their own wallet. They encouraged residents in their country to download the wallet by giving them a couple of bucks of free Bitcoin. And there's more Bitcoin wallets in El Salvador right now than checking accounts. So we saw this wave coming. We see the adoption happening over a couple of years. It's not going to be overnight, but the ability to sell Bitcoin, number one, to help immigrants. And as that adoption and trust factor kicks in and they see that, hey, this is something where I can get more money to my family working the same amount of hours here. But secondarily, as we're building out a national sales team to go bring on more convenience stores and tiendas, it's a fantastic catalyst for our salespeople to be able to flop down a door sticker, say, hey, I want to put this on your door, buy Bitcoin here. It's a differentiator amongst our competitors out there that are in the financial transaction world for the underbanked. So we see it to be it's really a two-pronged approach. Number one, help my sales guys. Number two, this will be, again, it's going to take a little while to be adopted. We think later this year, early next year, as far as the immigrants and remittance. But there was just an article in, I believe, one of the New York papers last week talking about Western Union and talking about how cryptocurrency could help the underbanked, and which bluntly, I've always been a big fan of cryptocurrency from a standpoint of enhancing people's lives, not so much just an anti-government or anti-control means of value.
That being said, though, you need to make a buck as well. So How do you make a buck through that? What kind of fees are you charging?
Definitely not 15%. Right. There's a fee. Hey, but keep in mind, we bring in a total comprehensive suite of underbanked financial products. So we're making money on 10 different things. Let's say, for example, if I get your convenience store, you've got to sign up where now every one of those prepaid wireless customers can pay their top-ups every month there. We're making a cut on that. Reloading debit cards, we make a cut on that. Putting a gift card rack in your store where normally an independently owned store wouldn't have the ability to have a gift card rack. It's only the big chains. They don't qualify under the banking rules. So there's a lot of things that we bring that store where we're making a cut. You don't go into Walmart and ask, well, if you're only making 10 cents on a gallon of milk, how are you going to make it? And it's also, again, another differentiator to box out any competition from coming in. If I'm taking care of your store, you've got one ACH, one support line, and all of your underbanked financial products are coming from one company. Hey, I'm your guy. We're your company, and you're not going to talk to anyone that pulls your door that's coming in with a one-off product.
Good question from Lou in the chat. I like to typically save questions for the end unless there's something that I was going to bring up anyway. So Lou asked, how do you acquire new customers? You've made claims of adding 1,500 new customers per day. That's over one new customer per minute. How is this possible without advertising?
Yeah. Okay. Now let's clarify. The 1,500 customers, that's on the mobile broadband side. So that's the B2C product. That is, I got one right here. Your tablets. We got brand new tablets that we get in the hands of people that qualify. And to put that in perspective, so you are jumping gears a little bit. That's not the convenience store. This is going directly to the consumer. But great question, though. We leverage our relationships with the convenience store, and we have salespeople that'll set up a pop-up tent in the parking lot, kind of like a tailgating tent. Fold-up table, banners, free internet. Customers walk up. They go through an enrollment process. It takes about 10 minutes. We scrub them on the national database that qualifies them, and boom, there they go. That tablet cost me about $85. We get reimbursed $100. The service we get paid $30 a month reoccurring. The customer doesn't have to pay a dime. We've got a 60% margin on that product, so it's a fantastically lucrative product. And one tent can do upwards of 30 to 40 a day, and we've got teams all across the country. We're in 14 states right now. We expect to be in 50 states here in the next 60 days. We're over 67,000 subscribers, so you can do some quick math on that. The 67,000 times 18 gross that's being kicked over from those. This has been an interesting transition. Well, since I originally spoke with you the first time, Spencer, I was prophesying what we're going to do and what we've built and what we're ready to scale. Now we're talking to, and it's a lot more fun because we're scaling it. We're doing it. We're in that hyperbolic growth curve, and we're not burning cash anymore. We're making money. And the question that always comes up, you guys are telecom technology company, micro cap that's growing at a crazy rate. When's your next capital raise? And I know that question's in a lot of people's minds, so I'll beat you to it. I have no desire to raise capital. I'm the largest shareholder. I'm not hammering my position with the company when we're growing at a rate organically that's off the charts. We're looking at doing 3x revenue this year compared to last year while making money. So that's a great question about how we bring on customers, though, because that is different. We leverage the convenience stores that we do business with to use their parking lot. We have to have experienced, compliance-minded, trained, enrollers that are working in those tents in the parking lot to bring customers on for mobile broadband.
In that same PR where you announced the 1,500 new subscribers in a single day, you had a little chart there, and it said that in August you had 800 in August of last year, 800 total mobile broadband subscribers, and now you have 45,000. I'm just curious, like, is there any churn there?
Churn's going to be between 6 and 7% normally.
Okay.
But to put that in perspective, we're sitting I don't know when that was, 3 weeks ago?
Yeah.
And we're at 67,000 today. So no, we're banging it out, Spencer. And again, that's in 14 states, and this is outside. So we've got some interesting catalysts happening right now. We're going to be in all 50 states here shortly. The weather's breaking. So our teams are also going to be able to grow up north. We're looking at about 400 salespeople. They're going to be out there. And my projections, I just had a long talk with our national sales director last night. We're looking at doing over 50,000 a month. Yeah, this is fun. Well, but I tell people we expected this. We built this. That's why I invested $7 million of my own cash before NASDAQ to get us here. We built all the infrastructure to be able to scale that quickly. And, we've talked before, I've scaled 2 telecom companies before, so we knew what was coming.
So outside of the weather getting warmer, what other secular tailwinds are at your back right now?
Well, we, on the bouncing back to the convenience store side, we have 8,000 stores that are transacting on our network. And we got all of those using 1099 contractors, which are really product reps that work for themselves. They're good for bringing on doors, but not great for creating same store sales. So we started, we talked about this last time, we started hiring an in-house sales team, and that's going well. Our next region that we're going to be hiring in is New York. Mass transit in New York just went cashless. They've had trouble getting, actually grab one of these too. They've had trouble getting these in the hands of the third of the people in New York that are underbanked. It's a card that they use that they've got to reload. They tried to go big box and use CVS and Walgreens, but they found out, just like I did 15 years ago, that clerks at Walgreens and CVS, no offense, but they have a lot of turnover and they're not trained on certain things, and your product usually ends up in a box in the back of the store. Mm-hmm. So they want us to go out and get the mom and pop bodegas, incentivize them, send the traffic to them, and reload. So we're hiring 3 salespeople in New York in the next 2 to 3 weeks, and then we're just going to go region by region. And look, it's relationship selling. So those numbers, while we have the mobile broadband that's just skyrocketing, double-digit growth every month, sometimes every week, the store growth, which ultimately will be our metric of value, adding stores and working that to get that over $2,000 a month per store, that's going to take 4 to 5, 6 months, kind of like real estate. You got to build that relationship, you got to build the trust, and then that store owner, because he controls the store, it's not a national chain where they have a planogram. Some guy in a big building decides where things go. If you walk into that store and you're taking care of that store owner, he's pretty much going to let you bring in anything that you want to. So I do expect to really see that stores to start skewing up at the end of the year.
And this is sort of a visualization of the business, the core of your business, right?
Yes. And what that is, that's how we built the system. We've got hard servers. I don't know if that's the right word. I'm not an IT guy, but we've got physical servers that are 80 feet beneath the surface of the earth in Missouri. And we interconnected with the companies you see up there, obviously AWS. So we call it a hybrid cloud. We've got fail safes where our transactions happen almost instantly. Very difficult for us to ever go down unless there's an earthquake in Missouri and AWS goes down at the same time. At the store level, most stores now have a computer at the register. So we have a secure app that we prefer that they use for all of the financial transactions, whether it's taking a payment for a track phone, Boost, Metro, PCS, or like we said, reloading a Visa debit card or activating wireless, anything like that. We try to do, if they have a computer at the clerk there at the register, the clerk will do that transaction for them. Or if they don't, if it's one of those where you kind of got the little cubby hole, bulletproof glass situation where everything's really tight,
Yeah.
5 hour energy and things are just stacked almost like Winnie the Pooh's home. Then we do the Verizon. Yeah, well, no, that's everything's relative. The Verizon, our developers reprogram the software in a traditional credit card machine. And so all of these transactions we can do through that credit card machine. So I could have that credit card machine right there. For example, to stick to your topic you started with, you could walk in with $200, put it down on the counter, and I could go through and convert that $200 to cash. It would text you a paper wallet that you would open up, and it would deploy that into your wallet on your device.
And I know I'm jumping around here, Brian, but I do want to go back to the prior conversation of just remittances, because I was just reading the other day. Obviously, with what's going on in Ukraine is horrible right now, but remittances are through the roof. Is people are just like every which way. People are sending money. People are renting Airbnbs that they're not going to stay in. I mean, people are just doing all sorts of things. Geographically speaking, can you elaborate a little bit on your plans? Because I don't think you're in Europe at all right now. Do you have plans to expand beyond just North and South America?
Our software was built from day one. I gave the directive to our developers, and we built the thing from scratch starting 4.5 years ago. I gave them, because we've spent so much time down in Central America, and as you travel internationally, you realize that the whole world is underbanked.
Yeah.
We're spoiled here. Basically wireless in almost every other country is prepaid wireless. There is no contracts where you just pay or it's automatically. I mean, you have to pay. Like in Central America, you got to reload that saldo. You got to get it in, or you're done. So we made it to where it could be converted to any language. It could be functional, and especially with the digital currency side, there's no reason why I couldn't drop that same exact terminal as long as it has internet access. That same functionality could happen anywhere in the world. Now, I will say this: I'm a very laser focused maniac when it comes to business. I don't chase shiny objects, and I'm not distracted. So the grass in our backyard right now is so green, and there's such a huge opportunity. If we're going to be going from 50 million in revenue to 150 million revenue and looking at 20 million EBITDA, which, we've got 12 million shares in the float. I mean, that's pretty nasty our first year on NASDAQ. So if we're hitting this, doing things internationally right now is not something I would look to do in the next year or two. We don't have to. The Miami Herald just put out an article a week and a half ago that 30% of the state of Florida qualifies for the subsidized broadband program that I just talked to you about, ACP. Wow. It was made permanent. So it's a big, big deal. So again, Florida is not a poor state. They're a great cross section of the country. So you extrapolate that out, 6 million people in Florida, extrapolate that out across the country. We have all 50 states, and we leverage both the convenience store, converting that into a tech hub. And now that the immigrant population is exploding as well, so every tienda, mercado, those are all potential sources of distribution for our products. So there's hundreds and hundreds of thousands of stores. There's millions of potential mobile broadband customers. We dovetail those together. There's so much opportunity here at home. Is it something I would look at in the future? Absolutely. I will not run this as a mom and pop, but we killed ourselves for 4 years to get to NASDAQ. We did it. Now we're making money. So I definitely want to stick to the strategic plan and then look at the upside. Hey, but look at this. As soon as remittance is in that concept of, hey, if I go in and I put my cash on the countertop and now I've got it on a wallet on my phone, and I could send it to my loved ones and they get more value from it. When that really kicks in on the Central and South America, the natural play I don't think would be going to Europe. I think it would be going to Central America and South America, and helping convenience stores there and enabling them to accept Bitcoin to do transactions at a store level. That's where I think it would be. If I had to guess right now, that's where I think our play would be.
And then last one, this is a question from 30 FTJ in the chat. So just to be clear, what SurgePays is in the sandbox you play, and you're a direct competitor to Square, he's asking, correct?
No, Square does more transactions from a credit card merchant processing side. We provide essential services to the underbanked specifically. We never cross paths with Square.
So yeah, Square more of like a small business play. SurgePays more of a local convenience store play, underbanked play, right?
Yeah, and I want to be clear too that Square would allow an independent mom and pop to do credit card transactions and that type of banking. We converted a Verifone terminal so that they could use it as a small, maybe a quasi computer to do transactions. So if you look at it this way, Square's customer is the convenience store. Our customer is the underbanked. We reach them through B2C with our mobile broadband product, and then we reach them through the store where they go 5 to 6 times a week. So we reach the ultimate customer via a client who is the convenience store.
Got it. I hope that clears things up at 30. Brian Cox, he's CEO of SurgePays. Brian, it's always a pleasure to chat, man. Have a great rest of your day. Have a great weekend.
You too, sir. Enjoyed it. Thank you. Talk to you soon.
All righty. Let's keep it in the crypto world here. But this is going to be a fun one. This one right now. I'm going to bring on Mark Cercos, who's the co-founder and CEO of MetaSoccer NFT. If y'all don't know about the world of NFTs, or really pay to play, that's really what this is pay to play. We're going to talk about like the future of video games as it pertains to NFTs and how companies like MetaSoccer aim to capitalize on that. So without further ado, let's bring on Mark Cercos, co-founder and CEO, MetaSoccer NFT. Mark, you ready? I'm bringing you on. What's up?
I'm ready. Hello, Spencer. How are you?
How are we doing today?
I'm fine, thank you. Busy day as always, but it's Friday.
That's true. So wait, so whenever I talk to a founder or a co-founder, as you are, I always just want to start with your background, because you are the CEO of a company that exists in an industry that did not exist a couple of years ago. So walk us through how you got to this point in your life, in your career.
Yeah, exactly. So everything starts in 2005 when I created my first company. I was 18 years old at that moment, super young. And I created a B2B company. We were creating like virtualization, operating system virtualization on desktop, on web browsers, on desktop web browsers.
Yep.
Very early for that moment. Then we sold that company on 2014 to Telefonica, that is one of the biggest telcos here in South Europe. And then I decided to create something new, and it's Champion Games. That it's a game studio based in Barcelona. That it's where we are from. We released the first game in 2015. It is a soccer fantasy game called Be Manager. And we bootstrapped the company from 0 to 2 million users until 2020, that we decided to raise money, $1.2 million, in order to pivot the company from free to play to earn, because we were looking into all this space, and we saw that it was a great opportunity to create what we always wanted, that it's basically create a 1 billion company, and Be Manager wasn't that game that will allow us to achieve that, and that's why we decided to pivot and mix our experience creating soccer management games with NFTs. That of course, some of the founders, for example me, we have been involved in crypto since 2013, very early, and we have been always looking at that in a very deep way, no?
So explain play to earn, because that model is, again, this whole industry is new, but that's the model at the core of your business, play to earn. Explain that.
So basically are games that allows you to generate income, to generate revenues, always with crypto assets. So these play to earn games are games where all the assets in the game, like the assets like characters, for example, or weapons, this kinds of stuff, or maybe skins, are NFTs. And the coins that normally the games have are crypto assets, like cryptocurrencies. Okay, so mixing both allow us and the game developers to create entire digital economies where users can own the real assets of the game. In our case, users can own the footballers, the soccer players inside the game, and all the revenues that are generated that normally in free-to-play games are currencies that doesn't have any value. In this case, the currencies that the users can earn by playing the game, they have really real value in this case.
Okay, walk us through the MetaSoccer market, the MetaSoccer universe here.
Yeah, so basically what we are building, it's an entire football or soccer ecosystem, no, or metaverse. What does it mean? What we understand as a metaverse, it's much beyond using virtual reality glasses. For me, a metaverse, it's an entire economy, digital economy that works by itself in an independent way of than reality, no? than real life. So basically, it's a place in a digital world where you can have a new job. And in this case, your job in MetaSoccer can be being a coach of a virtual team that doesn't exist in real life. No, so you can generate the income up to $100,000 per year by training or coaching a virtual team in the metaverse. So
I want to bring up a graphic here. This is essentially the core of what we're talking about right now. This is this is a player in the MetaSoccer.
This is one of our assets that it's called the Youth Scout. With the Youth Scout, you can mint. That basically mint. It's like creating new assets in the blockchain. So with the Youth Scout, you can explore the market and mint players. So basically, when you have a Youth Scout, Youth Scouts have different traits. That some of them are better, like finding defenders, attackers, goalkeepers, and you send the Youth Scout to explore the market, and after 6 days, the Youth Scout will come back with new players that are basically new NFTs. No, all these players have certain set of attributes, like they have like initial skill that it's basically a score, and a potential skill. Just like real life, no? Messi, when he was 18 years old, he wasn't as good as he was at 30 or as he is now. Maybe now it's a little bit worse than when he was 30. So we are doing exactly the same. So our players has an age. They are minted between an age between 16 and 19 years old. They evolve, so because they have this potential skill, that it's a maximum skill that the player can achieve at the peak of his career. And you, as a user or as a virtual coach, you have to manage all these players. No, you have to find the way, work on these players in order that they can achieve the maximum potential that they are allowed to achieve. You can do that by training the players. You will have a set of training. As a manager, you will you will unlock new training facilities, new training skills, so you will be able to improve most the players, and then you have the matches. No, of course, you have to not just training the players, you have to play matches with them. In this kind of game that we are building, it's not like this kind of FIFA arcade games. No, you are not in control of the players. What you are in control, it's about all the strategical side and financial side of your club. No, so you have to manage the finances, that in this case are real finances, because of course you are putting your money in order to play here. But because you have to purchase NFTs and you have to purchase the currency in order to start playing. So you can start playing with an investment about $100. You don't need that much if you want to compete in the lower divisions. And then so you have every day a match against another club coach, another team manager, that it's another user. And so you will compete. The matches are like simulations between your stats and your strategy that you decided, your lineup, against the other user strategy and lineup. No, this is called football manager games or soccer manager games, and it takes into account the strategy, the motivation of the players. They get sad, they get happy, depends of what you do, the actions, that they get injured, and they get tired too. So all these things are your duty as a manager of the team to take into control. And if you win the match, just like in real life, you participate in a league, you will generate points at the end of the match. If you win, 3 points, and it puts you in a table. And if at the end of the season you are in the top classification, in the top classifiers on the table, you will generate revenues. These revenues comes into cryptocurrency.
Yeah, we'll get to the currency in a second, but before I forget, Mark, I did want to just quickly play this short video that you had sent over.
See you on MetaSoccer.
I didn't realize it'd be that loud. Sorry, everyone. My ears hurt. All right, let's talk about the economics or the tokenomics of MetaSoccer here, because that is what interests me the most personally. So there's 2 tokens here, right? And you can see them up on the screen. There's MSU and there's MSC, right? Can you explain the difference?
Yeah, so the MetaSoccer universe, MSU, it's the governance token and also an utility token, no? But it's the primary token in all the ecosystem. With the MetaSoccer universe, you can purchase players, you can purchase all the assets. All the main actions across MetaSoccer are done with MetaSoccer universe. Okay, and yeah, it's a governance token. MetaSoccer Cash, it's not a governance token, it's only a utility token, and this token, it's not pre-minted, and it's dynamic in a way that it will be generated as it's required in order to deliver, to reward the users once they win, no? They generate revenues. In a similar way, for example, Axie Infinity, that it's the maximum exponential in this kind of games, it will be the SLP, and the MetaSoccer Cash, it will be similar to SLP, and MetaSoccer Universe will be similar with some difference, because in AXS in Axie Infinity doesn't have utility or that much utility, but it will be similar to AXS in Axie Infinity.
So in reading your white paper, you wrote how you at first explored the quote the traditional model of limiting the supply of your utility token, right? And then and you found that wasn't quite working. So you've gone for the other approach where there's a dynamic supply of tokens. Can you explain? I mean, it's sort of a trade-off. They both have pros and they both have cons. Can you explain though why? Again, it says it in the white paper, but can you go into more detail about why you chose to go for the dynamic model?
Yeah. So basically, our MetaSoccer universe, it's a dynamic token also, but it's a dynamic token where we don't have the ability to create or destroy. We are not in charge, so we don't control this dynamic token. It's a smart contract that it's called a token bonding curve, but it's a smart contract that has this mathematical formula that it's in charge of destroying and creating a token as token demand grow or goes lower, no? So when there are more users purchasing the token, it generates more token in order, and the price also goes up. So basically, the supply of the token and the price of the token, it's already determined by a mathematical formula. So I don't know if you have some images that you can put, but it's like a curve, a graphic that already says how the price and the supply it's gonna be in the future. No, so why this is better than a token that doesn't have this kind of dynamic supply. So first of all, for us it's much more easy to forecast forecast predictions and forecast how the economy it's going to work in the future. No, so we can estimate depending on how much users enters into the game, we can estimate which price will have the token. So it allows us to regulate the prices of the sales that we do and make proper predictions about our entire ecosystem. No, and also it's good for the users because the price it's always be the entry of the game it's going to be lower because when by creating more tokens, more supply, it ensures that the price it's not making a 10x in 3 days. No, because it's more stable. Also give isolates this token bonding curve system isolates since it's not a sexy token to trade because of course the token goes up and goes down, but it's like more stable than another coins because everything it's like predetermined, and it's not interesting for speculators that just want to trade on this token without having any kind of interest in the game. So it isolates the economy from speculators that can destroy the game economy that we have in a similar way that we have seen in another free-to-play earns. Games.
This to me is the most interesting thing because you're creating an economy here, and you need to obviously make an economy that incentivizes transactions, incentivizes interest. You want it to be volatile, but you don't want it to be too volatile. You don't want it to be you don't want the price to go to infinity because that closes the door to new people. You don't want the price to go to zero either. So you want to keep it within a range, and it's a fine line to walk. So I'm
exactly.
very,
The best example that I find here, so we are onboarding real life soccer clubs, no? So our clubs are a mix of new generation clubs that you can create or some gaming guilds can create, but we are also onboarding some real life clubs that will have their virtual squad inside MetaSoccer. So imagine that these professional clubs purchase a player in MetaSoccer for $10,000, and then dollars in MetaSoccer universe conversion, no? And then after 2 days, the price of the token drops like 30%. So it's a little bit crazy, no? It doesn't
can't have that.
Exactly. So we are trying to avoid this speculation and craziness that some tokens with the slow market caps have with this token bonding group system.
Got it. Well, there's a question from our chat. Are you affiliated with any fan tokens like Lazio or anything like that?
Yeah, no. Right now we are not doing anything in the way that fan tokens does. Probably in a future, the virtual clubs will allow them to create some kind of fan tokens to engage with the fans. No, so we are creating new generation of clubs. So maybe we will give this kind of options in the future.
Is onboarding real world clubs and from like the top tier of the major leagues, is that a major priority?
Not really. I mean, since we are creating these new clubs, I mean, we see like real soccer clubs more as a marketing strategy. So are not key for the business model on board real life clubs, but it's good for marketing because of course the contracts, the agreements that we sign with them comes with a visibility plan. No, so real clubs that sign with us, they will put in their website the metaverse squad that they have in MetaSoccer, they will start generating content in a similar way that they generate content for men and women squad. So it will happen, and we treat this more as a marketing strategy than something that it's key for the business model.
And just to be clear, the two tokens can be bought. I mean, within the game, but also just on Sushi Swap and anywhere you would transact it normal.
Exactly.
Tokens.
MetaSoccer Universe, it's already listed on Sushi
Okay.
Swap and Gate.io, and MetaSoccer Cash, it's going to be listed by the end of this month, probably.
You have a fan in the chat. Ederson says, here in Brazil, we are all connected to the MSU token. All of you in Brazil, Ederson? I found that hard to believe. Everybody in Brazil? No.
Well, it's one of the biggest community that we have: Brazil, Spain, Argentina. But awesome. We really think that Brazil can be a huge country for us. I mean, have all the components to become one of the biggest countries, one of the strongest countries for MetaSoccer.
And then let's just talk quickly about the roadmap. Obviously, it's public. It's on the website. It's in the white paper. But can you give us an update here on how your roadmap's coming along?
Yeah, sure. So right now, the only thing that it's available today, it's the Youth Scout. So you can purchase Youth Scouts right now in the secondary market, but we do drops, new drops every month. By the end of this month, the Youth Scouts will be able to start minting players. So scouting the market and bringing NFT players, so minting new players. That will happen by the end of this month. And also by the end of this month, early April, we will launch the first version of our PvE game. So basically, it will be like friendly matches that are going to be against a computer, an algorithm. And users will be able to start generating their lineups with the players that previously they created, and they will be able to start playing these matches to start training with the players. No, in June we are launching the full game that it's basically the PvP system playing versus another players or versus another users within these division systems. No, we have a pyramidal division systems where there is only one first division with 14 teams, and then the divisions grow exponential below this first division, and here it's where users will be able to start generating a realistic amount of ROI, of return of investment. So they will start generating good amount of revenues starting in in June, but in March, April, they will be able also start generating revenues.
Man, all right. I'm very much looking forward to learning more. I've only just begun to learn about this world, and I am very excited to follow the progress here, Mark. And may even try to get in the game myself. But Mark Cercos is the co-founder and the CEO of MetaSoccer NFTs. The token tickers are there on the right hand side, MSU and MSC, MSU being the main utility token. Mark, a pleasure to chat with you. Would love to have you back on down the line here as you get further along that roadmap, and we can talk about the updates.
Absolutely. Has been a pleasure, and I will be happy to come back when you want.
Thanks a lot, Mark.
Okay, thank you.
Have a good one. All right, that was a little bit different for this show, right? Typically, I'll keep the NFT conversations limited to our roadmap show because those guys, I will admit, know more than me. But it was really good to talk to Mark. This is a really interesting project. I'm very intrigued. But I'm very intrigued by just the whole tokenomics thing, the whole idea of tokenomics, right? The whole idea of building economies from scratch. How do you do it in a way that's equitable, that's fair, and that, how do you control supply and demand is a big problem. It's a big challenge. So I appreciate Mark coming on. Smash that like, guys. How many likes do we have here? Oh, 65 likes. 65 likes. Oh man, come on, guys. Can we get to 100? We can get 100 likes right now. Thank you for that graphic, Aaron. So here's what we're gonna do. We have a little bit of a break right now. Our next guest is gonna be Flora Growth. We're gonna talk to Luis Merchant at 10:40, so in 15 minutes. So what we're gonna do between now and then is I'm gonna bring on my man Aaron Bree, co-host of Benzinga Live with me, and we're just gonna hang out, shoot the breeze for a few minutes. You want to talk stocks? You want to talk the market? Drop some tickers for us. We'll take a look. But I'm going to bring Aaron on the show right now. AB, what's up?
What is up, Spencer? How you doing?
Good. Normally I'm next to you, but now I'm not. It's a little bit weird. But that's okay. What are you watching today, man? I've sort of been out of the market for the last hour or so. I don't really know what's going on. So lay it on me. Is it good or bad?
It's bad. I mean, it's more of the same, right? Everything is pretty much down. You have your small glimmers of strength in the market. Chevron up again 2% today. Chevron now at this point over the last 3 months is up more than 37%. This, of course, comes as gas prices continue to rise, oil prices rise. So some obvious tailwinds for Chevron there. But at what point, I mean, do you got to think like this is getting overextended even with gas prices rising? I guess it's whenever gas prices fall, Chevron's stock will as well.
Wait, so
But yeah, the S&P 500 down about 1.5% right now. NASDAQ trailing that a little bit. Dow down a little bit less, but not great out there. I will say, though, compared to the world markets,
yeah, it's not that bad. Not that
holding
bad, right?
up. Yeah, like a lot of the European stock exchanges were down like 3%. Yes, I mean, who knows? Maybe that's how much we closed today. But yeah.
Well, that's the benefit of being like in the U.S. is last. Exactly, that's the benefit of going last. Is the U.S. market opens later than everyone else, right? And the news overnight that the Russians had bombed that nuclear plant, like U.S. markets weren't open, but European markets were, so they bore the brunt of it, but we didn't. So it's nice to go last sometimes. You okay there?
Yep.
So the Qs are yeah. So XLE, which I bought live on yesterday's show, looking good for me right now. That's cool. I haven't had a win for a minute, so it's nice to have a win. Though it's not a win until you sell. How's growth doing? ARKK. Oh my gosh, continuing. So you literally only had like a 3-day run in growth, and it's given a good chunk of those gains back here. Oh man, brutal stuff.
Although ARKK is not getting like absolutely beat up today. It's down, kind of in line with NASDAQ right now. So I see that as a win for ARK right now.
What, the fact that it's not getting,
it's not down like 5% compared to the NASDAQ.
Yeah, I mean, but every day it's 2%, 1.5, 2%, 1.5. It's just a death by 1,000 cuts. I was wondering if we were going to close green for the week, Aaron. That seems to be out of the question now. At least on the SPY, I've got the weekly up here. But I was looking at this morning. It's just wild to think about how we haven't closed we haven't gone in the same direction 2 weeks in a row, or more than 2 weeks in a row, since late October, early November. Isn't that wild?
Yeah, I mean, these moves, I don't know. I mean, maybe if we're in a downtrend, you can't try to call the bottom right now.
No, you certainly can't. I mean, we still obviously haven't tested the low. That's the bogey right now, right? Is like last Thursday's low is going to be the level, of all levels that you lean on here. Tiny Pie says, Bree, give me your best bet for the weekend. I feel like maybe we should save that for Benzinga Live.
Sports bet?
I don't know.
I'll have to look.
All right. That's fair. And there's a few people in the chat that like are asking questions, but they're like way late. So like, sorry, you guys got to watch it live. I can't ask a question after the interview's over because they're gone.
Can't?
No, I can't. So
work on
sorry, everyone.
Anchors.
I know I should work on that. Man. All right. What else do we need to know here? Let's bring up my my scanner from Benzinga Pro up on the screen.
I mean, it doesn't seem like we're to a point where I don't even know how much headlines really matter. It just feels like price action is going to play out. I mean, we had that bullish headline before the market opened today about jobs report. And
oh my gosh, did you see that, Aaron? What a huge beat.
it doesn't matter.
It doesn't matter though. I think you're probably it matters. It just doesn't matter. It matters less than it did. Like if
there was no war going on.
If there's no war going on, this report would have mattered a lot. But I think it matters a lot less with the war going on because it's the last jobs number before the Fed meeting, and the jobs number is arguably outside of CPI the most followed economic indicator. But anyway, what a beat though. Holy cow. Hiring picked up, and as such, wages didn't increase for the first time in God knows how long. So pretty crazy beat there. I'm looking at my movers tool. Sorry, go ahead.
I was saying I'm watching the S&P 500 because we do David Green we were talking about these levels with him, but it seems like we're getting to a point on the S&P chart where we're either going to bounce or fall through and have kind of less resistance than we have right now. So I'm watching the SPY. Obviously, I'm hoping for that bounce, but man, it just feels like, Spencer, right now we're in this downtrend, and I don't know what's going to kick it.
It feels like we're in just a chop trend is what it. I mean, maybe look, the next big catalyst obviously is going to be the FOMC meeting, which is in 2 weeks. It's not next week; it's the week after. It's the 16th, I think. So we'll wait on that. I'm going through the movers tool and looking at what's jumping out to me. This is sorted by gainers from the open on the left, losers from the open on the right. And I just want to see what's happened since 9:30. So Duolingo jumps out to me, up 9% since the open. Let's go to a chart of DULO. They had earnings last night. I know it's a relatively highly shorted stock. If you go to the overview tab, you can see 16% of the float is sold short. I feel like we've been desensitized a little bit when because we're used to seeing like 50% AMC is short squeeze, 3/4 of the float is sold short, but 15% is higher than normal. So it's a relatively small float, 15 shares, and about 15% of that 15 million are currently sold short. Now the earnings, let's see what the earnings were. They still lost.
This is a stock that, like a few of my other favorite stocks, have a lot of insider buying. I've noticed a lot of insiders and directors buying shares of Duolingo.
Interesting. I feel like, I mean, come on, the trend speaks for itself, right? The trend is your friend. I feel like I might be exhibit A or like example A for Duolingo because I downloaded the app. I've downloaded this app on 3 separate occasions, Aaron. On 3 separate times I've downloaded the app, and I've used it, I don't know, 4 times in total.
Oh, wait, actually, hold on. So from through January and February, there was a lot of buying, but in the last couple weeks, there's been a lot of selling.
Oh.
So it seems like kind of a wash on the insider trades.
Wait, Dario is asking what happened to Thursday picks with Cowboy Guy. We got to bring Cowboy back on the show.
Yeah. I've been texting with Cowboy. We're gonna do a March Madness preview with Cowboy. Don't you worry.
Yo, I'm meaning to tell you about that, Aaron. I am going to be in Vegas for the Final Four.
But the Final Four is not in Vegas. It's in New Orleans, actually. I looked.
No. Yeah, I know. I didn't mean I was going to be there.
You're just going to be in Vegas.
Going to be in Vegas for the Final Four. So if you want to, like, I don't know, maybe we should plan for that somehow. I don't know, you want to like me to play. I've never actually bet at a sports book before, like a real sports book. So I'm kind of looking forward to that. But we'll see. All right, so we're gonna have our next guest on in 5 minutes, and then I'll let Aaron go. But I want him to just hang for a few. If you guys have any tickers you want us to look at, drop them in the chat. We're just chilling right now, trying to keep an eye on things. Just kind of looking through the earnings reports from overnight. How's Costco doing? Because that was a pretty strong report. But Costco is such a beast. Unless they blow it away.
Yeah, they're down. Costco's
I know. I know, but it's
3.5%.
such a beast. Like what's the? Let's look at some metrics here. Costco. Oh, it's actually a little bit pricey. Interesting. Forward PE of 42. Price of sales though. This company they're drowning in revenue. They make so much money.
What is the price of sales?
1.1.
Oh wow.
This company makes so much money. Oh man, like on the top line. Yeah.
Your other friend Callaway, down about 4%.
I've not looked at that.
Yesterday or a couple days ago, my buddy went to a golf store here in Detroit area, Carl's Golfland.
And there was like no supply of anything.
Well, no, he
Oh.
had like wedges. First of all, like he ordered like new wedges, and they took like 2 or 3 months to come in. So yeah, supply was an issue, supply chain issue. But when he was there, it was like he said like noon on a Wednesday, and like it's like a golf store, but they have a range too. He said the entire range was full. The store was packed, like the parking lot. And I was like, how do all these people? How are they just like hanging out at the golf store at like noon on a Wednesday?
What was the answer?
I don't know. I don't know. But anyway, Callaway stock down 4% today. But that made me think, hey, I mean, that can't be a bad sign for Callaway if these golf stores are that. I mean, we're getting very close now to pre-COVID levels. I mean, we're at January 24th, 2020. Before COVID, Callaway was trading at 21.31. We're at 22.89 right now. We're like a couple bucks off, and we had this whole golf explosion during COVID. I don't see how it makes sense to be back at pre-COVID levels right now.
Isn't we should be higher, is what you're saying?
Correct. I mean, think about it.
All right.
Callaway had a tailwind.
Yeah,
I doesn't reflect that.
For sure. All right, AB, thanks for stopping by. I'll catch you in a couple hours on Benzinga Live. We got a big show today. You're going to be doing a remote segment. So
I will be. Stay tuned for that. You do not want to miss Benzinga Live today. Again, that will start here in a little bit less than an hour, 11:30 a.m. Eastern. Spencer, great job so far today. Enjoy the rest of All Access. And please smash the like for this, Spencer, if you have not already. He's doing a little bit of a marathon today, going straight from Benzinga All Access to Benzinga Live, keeping it rolling. Throw pre-market prep in there. That's like what, 5.5, 6 hours of streaming. No big deal for Spencer, but go ahead and smash the like for him. All right, guys. See you soon.
Peace. All right. Before I bring on Luis, I just want to do a quick plug. All right. We generally do a pretty poor job here at Benzinga with advertising for ourselves. So, sorry, fix the mic there. Check. Okay. Benzinga Pro, guys, is the engine of this business, okay? And it is our real-time news and research and information terminal, okay? Pro.benzinga.com is the website to go to. I'm going to bring it up on the screen right now. That's what I was just showing right now. This is Benzinga Pro. That's up there on the screen, okay? Pro.benzinga.com for your free 2-week trial. Okay, everyone gets a free 2-week trial. If we've got audio squawk, we've got scanners, we got movers, we got a press release feed, an SEC filing feed. We have calendars for earnings, for guidance, for IPOs, for FDA data. We've got almost everything you could need. Almost everything. You can't trade through Benzinga Pro yet. But seriously, guys, check it out for real. I'm going to drop a link to get a discount. How about that? I'm going to drop a link to get you all a discount. Actually, I'm pretty sure it's in the description. Yeah, the link should be in the description of this video. If you're watching this on YouTube, just scroll down into the description, and there's a link right there. Get 25% off Benzinga Pro. Just scroll down. Literally, it's right there in the description. So seriously, check it out. At the very least, take a free 2-week trial. See if you like it. It freaking rocks. Okay. Seriously. It's the engine of this company. I use it every single day. This screen that I have up here right now is the very first thing that I look at. When I sit down at my desk every day, this is item number one. Before my email, before Slack, before charts, I just want to know what is up and what is down. And this tells me. This is the first thing I look at. And then I do my other stuff. But anyway, I cannot recommend it. And thank you, Lisa Leia. Cannot recommend it enough. For real. Rosario, what do you think of Chiron Life Sciences? Rosario, do me a solid and drop me the ticker. I don't know off the top of my head. I'll make a note and we can talk about it on our next show, which is Benzinga Live. So I'll do that. But drop the ticker in the chat because I don't know off the top of my head. All right. Enough of the plugging. I don't really consider myself a very good salesperson. So we're just going to move on from that. Let's bring on, let's switch gears. Okay. We've been talking about a lot of crypto today, but I want to go over to the other growth space that I love, cannabis, that if you guys have been paying attention, you know that I have owned several cannabis stocks for quite some time and will continue to own them. Luis Merchan, he's the CEO of Flora Growth, ticker is FLGC. Let's bring Luis on the show right now. Luis, how we doing?
Spencer, thank you for having me here, and I think you're a great salesperson. By the way.
Thank you. Is that I think it's a new microphone since we last spoke.
Yeah. I'm trying to set myself up so I can be at your level, but we'll see. We'll see how long it's gonna take.
Dude, it's not me. I have people. Okay. Oh, you have people too, I'm sure. So
yes.
I did not build any of this. I just show up and sit down, man. All right. All right. So since we last spoke, I know actually before we even get to that, Luis, for people that don't know, explain the business at a high level, top down.
Yeah, of course. I'll try to be brief for the audience that is not familiar with the Flora Growth story. We are a company that has grown tremendously. We are a market leader in the cannabis space and have a very diversified strategy. It's anchored on growing the lowest production cost cannabis in the world, and our grow and our extraction facilities are in Colombia, which presents one of the best geographies in the world. We also have a very robust product portfolio across multiple industries, are distributing globally. And then we have a life sciences medical research arm that is focused on scientific-based research to support the claims that we know cannabinoids can bring to both medicinal and recreational products.
How do you control? So low cost was the first thing you said. How do you control that? How do you control the cost? That's one of the biggest criticisms that you hear of cannabis is it's just a commodity. It's just a commodity. How do you control costs?
It depends, right? It will become a commodity. In fact, we believe that portions of the cannabis trade, as barriers of entry start to go down, Spencer, are going to commoditize. So in order for you to compete in that space, for example, dry flower or derivatives, you have to grow out one of the lowest production costs in the industry. And the first factors that come into play there are infrastructure, right? When you're growing cannabis in a controlled environment, you have to spend a significant amount of money on infrastructure. If you're growing in North America, then skilled labor is very expensive. All of those elements that you have in a greenhouse, say in North America, are naturally present in Colombia. We're growing on the outskirts of Bucaramanga, which is a beautiful, beautiful place. It presents one of the best geographical conditions. That's why Colombia is the #1 producer of flowers in the world. And for that reason, when you add up the geographical elements that are inherent of being Colombia, the seasonless environment, which allows us to grow 3 times per year, the fact that land is exceptionally low cost, that skilled labor is a 10th to 15 times more cost effective than that of North America, then you can add up to a production cost that cannot be compete with internationally.
I'm looking at the map here. I mean, your global distribution is frankly, it's pretty impressive. You're not the only company that's on multiple continents, obviously, but that's about as diverse as you can get, geographically speaking, just about.
Yeah, that is correct, Spencer, and that comes from our strategy, from our diversified strategy. So when Flora was first created, we thought about this growing cannabis and becoming the breadbasket, the green breadbasket of the world, and that was our first initial intent with the company, but our strategy has evolved since then because we understand that barriers of entry are significantly high for those inputs. Even though flower and derivatives represent anywhere from 50 to 60% of the entire cannabis market, there are other categories that are growing exponentially and have lower barriers of entry, like edibles, like some of the CPG categories, like topicals, et cetera, et cetera. We have been able to diversify our portfolio in those categories, and we have been able to expand our distribution reach globally because of that.
Okay. Let's talk about your product mix here. I love this. Well, no, actually, no. Let's just stay here. Let's talk about your product mix.
Yes, I mean it's really one of the best in the industry. We clearly we just made a significant splash in terms of an announcement with the acquisition of Just CBD. Our categories extend beyond Just CBD, but I'll take a minute or two to talk about it, yeah. Spencer. Just CBD is, of course, is a leading edibles brand in the United States. Generated $28 million in revenue, audited revenues in 2020, with $7 million in EBITDA. Is led by one of the best leaders in the industry, Hussein Rakin, who was recognized by Forbes for being 30 under 30 in terms of entrepreneurship. The company is an exceptional company with a portfolio of products that extends to from edibles to topicals to pet wellness, and it has over 14,000 points of distribution and a strong consumer base. We also are in the technology space with the acquisition of Vessel, which is a company that we have on the West Coast. We have a food and beverage portfolio of products, which include Tonino Lamborghini beverages that are going to be launching in Q2, and of course, topicals and other brands that are being distributed worldwide.
I love this chart that you sent over. Okay, this is the global cannabis market today. The product breakdown today versus where the projections are. It'll be 8 years from now, and yeah, they look very similar. That's the takeaway. Right. The takeaway is that in terms of global product mix, the market is about as developed as it's going to be. That's what this is indicating, right?
Well, in terms of product mix, but in terms of growth, the growth is going to be exponential, Spencer. As you know, regulatory environment is changing dramatically on a day-to-day basis. And what we have found is that in order to thrive over the short, mid, and long term, you have to have a diversified product strategy. I think what this pie shows is the importance of playing across multiple product categories and industries within cannabis in order to realize revenues and become profitable over the short term. One of the biggest challenges that companies that have been trying to play on the global scale have experienced is the lack of meaningful revenues as compared to the investment they've made in infrastructure. We have solved for that by playing in the wholesale commercial space with flower and derivatives, by playing in the portfolio of products and brands across multiple categories, and by investing in research, because that investment in research allows regulatory agencies, allows the medical community, and allows consumers and patients to become more comfortable with utilizing cannabinoids and products.
What kind of research are you investing in?
Well, there's a significant amount of research coming worldwide. A couple of examples that I'll highlight for you is a clinical trial on formulations that are aimed at treating chronic illnesses around pain, like fibromyalgia. We're working with the University of Manchester. That test, our lead scientific advisor and member of our board, Dr. Annabelle Manalo Morgan, is in London right now, advocating for the trials with the NHS. So we look forward to great results from that will allow us to put some great formulations into consumers and patients. And then we're also working with INVIMA on a couple of fronts. INVIMA is the equivalent to the FDA in Colombia, which of course is a major important geographical location for us, as the farm and several of our infrastructure laboratories are there. We're working with INVIMA to ensure that we launch to market food and beverages and dietary supplements that are safe, and we're helping the government establish this regulatory framework so we can put products out there in the market, as Colombia has now become a country that is at the vanguard of cannabis regulatory and legislation.
All right, let's talk timeline here. Obviously, you've got the IPO on the NASDAQ. That's done. The only reason you can even do that, well, one of the only reasons you can do that is because you are not a U.S. multi-state operator. You have operations in other countries. Otherwise, you wouldn't have been able to do the NASDAQ IPO. But you got that done. Congratulations. So now what's next?
Well, we have executed since then. So last May 11th was our IPO under the ticker FLGC, of course, Spencer. And we have made significant movements in terms of the execution of our strategy. Over the last 12 months, we have been able to complete the acquisition of Vessel, to complete the acquisition of Just CBD. We completed a secondary financing that enabled us to deploy capital to expand our infrastructure and generate some meaningful revenues. In November, December, we provided a guidance for 2022 of $35 to $45 million. And that comes on the heels of 2021 revenues in between 11 and $13 million. So that means that our growth trajectory is exponential. We expect to continue that growth trajectory into 2023 and beyond. But for that reason, we're going to continue to invest in expansion of revenues, expansion of distribution, and a very tight control of our product categories that we play across the entire globe.
What about? I'm interested in that Israel distribution agreement. Tell us about that.
Yeah, absolutely. There's Israel is an incredible market. It's very interesting, but our tenet in terms of distribution is not to become fully vertically integrated. For us, it's important that we partner with distributors that understand the specific markets in which we're going to operate. This specific contract is with a company called Artos. They're a leader in distribution across multiple categories in the Israel market, but they have become known for their exceptional execution, introducing new categories to market into the mainstream. And that's what we partner with them. Our intention is to get flower to Israeli market, and we look forward to start executing on that contract on the second part of this year.
And then it just says there on the graphic, just for this month, you've already guided to expect 42 tons of exports, of product exports.
Well, Spencer, there's been meaningful changes in the Colombian legislation. The biggest one happened 2 weeks ago, called Resolution 227. That effectively, effectively it allowed Colombian producers of cannabis, growers of cannabis, to register themselves as exporters of dry flower. Flora growth, we believe that we were the first one to do it because my team was in front of the agency the Monday of the announcement came on a Sunday. We were there first thing Monday. We now register as an exporter of dry flower. And what we're expecting this month is the export quota of up to 42 tons for the year 2022. A portion of that quota now will be dry flower, which will effectively open up a significant revenue stream. As you know, half the cannabis market is dry flower. We're now going to be able to activate these revenues that we have not been able to do so up until today.
It's always interesting when a company advocates for a change in legislation, then they get it. And then in a way, though, it does open the floodgates a little bit to everyone else, right? So it benefits you, but it also benefits everybody else. So
yes, absolutely. And I think, we firmly believe that there's room. I mean, as you know, Spencer, the cannabis space and trade globally is estimated between $200 and $300 billion. Yeah. So there's enough room for growth. The growth expected is over a 20% CAGR over the next 5 years. There's space for multiple companies to operate. However, at Flora, we certainly believe we have a diversified and completely different proposition for our investors, for our consumers, as we're not only playing in the wholesale commercial space that, as you mentioned, will likely commoditize, experience a compression in margins, but we're also all the other end of the spectrum, where we have a broad portfolio of products. We already have 500,000 consumers that have a direct relationship with us. And that means that we're able to quickly respond to the needs in terms of white space opportunities, develop new products, and of course, generate meaningful revenues that will not depend on third-party distributions over the long term, because that customer base is loyal to our brands.
I just got to ask you though, Luis, because as I said off the top, I've owned a couple of cannabis stocks here for a couple of years, and I've been following the space for a while, and I'm bullish, and it excites me, and I like the industry, and I like the business, but you cannot argue with that the market has been very unkind, right? The secondary market has been very unkind to cannabis. It's obviously it's a very cyclical business, still in its very early stages because we're not even federally legal in the U.S. Who knows when that's going to happen? At this point, they've been saying it's going to happen any day now for like 6 years. So, but like, how do you think about that? Because on the one hand, it's a very exciting industry to be in. It's a growth industry. It's emerging, but the reception, especially in the last year and a half or so, has been it's been tough. It's been tough.
Yes, Spencer, we cannot ignore the truth of the capital markets today, especially as it pertains to cannabis. I think the way you combat that over the long term is to execute on fundamentals.
Okay.
And the fundamentals of any great company start with great people. And we have a stacked team, Spencer, across all levels in the organization. We have a board of directors that focuses on governance. We have an officer team that has been complemented by the acquisitions that we completed that are multidisciplinary and have a proven track record of success. And we're focusing with that team on delivering on the fundamentals: meaningful revenue growth, a path to profitability, meaningful distribution, a loyal customer base. Those fundamentals, like, the market will not be able to ignore them over the long term. Like, eventually the companies that are being transparent as Flora, that are executing on the fundamentals, that have great leadership, great operators that can execute on the strategy of the company, are gonna come out on top. And this industry is here to stay. I think potentially some of the investments that came in early on were perhaps a bit too early, but you'll see that over the
I think so, maybe.
But over the next 12 to 24 months, you're going to start seeing some outliers out there that are executing. And we believe, of course, that we're one of those outliers that will not only show the blue sky promise of cannabis, that will also execute over the short term and start to show meaningful value to the investors in terms of the fundamentals of what a company should be, or what a public company should be.
Yeah, I think I always think about, like, the first run up that I was exposed to, I think, was like 2015, the first like major like cannabis bull run, and since then it's been a never ending, just constant. It's constant, man. It's constant.
It's not for the faint of heart. Believe me, we internally also evaluate that, and like, it certainly forces you. This type of environment forces you to be very critical with every dollar you spend, with every dollar that you receive. You take very seriously the investments that investors put into the capital that investors put into your hands, and you also take very seriously the responsibility of developing great products, of distributing great products of quality, because it's a very volatile market, and the only way you get through it is with transparency and execution.
I want to know, and I just had to confirm this because I wasn't 100% sure, but Luis will be speaking at the Benzinga Cannabis Capital Conference, April 20th. I think you're on a panel, Luis, on building, companies building the global cannabis opportunity. Here, let's bring it up on the screen so we can show everyone the panel you'll be on. So look, 3:20 p.m. Eastern time on the 20th. Luis will be at the Benzinga Cannabis Capital Conference. You should be there as well. Luis, are there anything else we didn't hit on that you wanted to, any points you wanted to get across? As you said, you have to take a long-term approach to this, but outside of that, are there any key points as far as product mix, as far as products that get you most excited? Anything that we missed?
Yeah, I think I want to reinforce the fact that the categories that we're playing in are experiencing meaningful growth, exponential growth. With the acquisition of Just CBD, Spencer, we are now have infrastructure both to serve the East Coast and the West Coast in the United States. The US is the most important market for us, and now we have a very strong foothold in the market. We should continue to see exponential growth, but very meaningful developments that we're going to share with our investors as they come to fruition over the next couple of months. And of course, look forward to our earnings call in the latter part of April.
How'd you finance those transactions?
Which transaction specifically, Spencer?
I don't know, any of them.
Well, there's two major rounds of finances that we completed over the last 12 months. The first one was the IPO, where we raised about $16 million.
Sure.
And then we completed a secondary financing in the month of November, where we raised about $35 million. Both of the acquisitions were a mix of cash and equity that were given to the owners.
Yeah.
And what's important here to highlight, Spencer, is that those teams, they're in it with us. These are not exits. These are people that just wanted to amplify the potential of their companies. James Cho, the founder and CEO of Vessel, is now the chief strategy officer of Flora. Hussein Rakin is the CEO and founder of Just CBD. He's going to remain with us for the next several years and will become part of the executive team of our company. So we're only acquiring companies where people firmly believe in what they're doing, and they just need an amplifier. And that's what Flora is for them, and we're very excited to have them on board.
All right, Luis Marchand, the CEO of Flora Growth. As I said, you can see him live, meet him, shake his hand at the Benzinga Cannabis Capital Conference, April 20th. Luis, thank you for joining us today on All Access.
Spencer, thanks for having me.
All righty. And just before I bring on our last guest of the day, another plug, if I can. I was talking to some of our events team people yesterday, and this is the message that they said, and I'm just going to relay it straight from them. This will be our biggest cannabis conference to date by like a country mile. Like, it's not even close. Okay, so bzcannabis.com is your website. Tickets are on sale right now. I mean, we're talking about like an event that's 7 weeks away? 7 weeks away. It's not that far. At the Fontainebleau, is it Fountain or Fontaine? I don't know. Maybe Fontainebleau, Miami Beach. Nice, beautiful hotel. April 20th and 21st. Check it out. I will not be there, but other people from Benzinga will be there. You can meet the whole crew. And no, whoever said that in the chat, I'm not an oil vape guy. Actually, I am an oil vape guy. I don't know why I said I'm not, but I haven't been for a minute because I'm very recreational, casual, social user. But yeah, check it out. bzcannabis.com. There's your ticket. There's your link. Get your ticket today. Come meet the whole gang. Not the whole gang, but most of the gang. And learn about cannabis. I mean, that's the point, right? It's the Cannabis Capital Conference. It's the intersection of capital and cannabis. Companies raise money at these events. They announce news at these events. Everyone from the game is there. bzcannabis.com. All right, enough plugging for me. I've done a lot of the advertising today. It's exhausting. Let's bring on our final guest from today's show. We are going to pivot away from the company-specific conversations. Going forward now, we're going to be doing this recurring segment on this show where we bring on Matt Timpane, who's a senior market strategist at Schaeffer's Investment Research. And we're just going to talk high level here, and low level, about the market, right? We're going to talk about stocks, we'll talk about oil, and we will take your questions. If you have a question about the market right now, drop it in the chat. So let's bring on Matt Timpane from Schaeffer's Investment Research. We'll do that right now. And yes, and sorry, before I do that, Matt, Justin, did you see that response in the chat? If anyone is interested, I don't know what discounts are available. I truthfully don't. So just email us. Email shows@benzinga.com. Okay. Or even if you want to skip the middleman, just email shows, because then I can just relay it. It can come from me directly. So email shows@benzinga.com and we can try to find out for you. All right, Matt, what's up, man? How we doing?
Not much, Spencer. How are you doing?
Doing fantastic. Can you do me a solid and share your screen? I would love to see what you've got for us. But we have a lot to talk about here. First thing I want to say is, how about that jobs number, huh?
Yeah, it was a blowout jobs number, and yet we still have obviously a fairly red day here today.
Yeah.
So that's kind of a big thing, is when you got good news and the market's not really responding to it. You got to kind of wonder what's going on there in the broader picture of everything. Did
All
my
right.
screen share
Yeah,
there?
yep, we got it. We got it up right now.
I'm having some issues here with Icon on the laptop today, so I mean I had to kind of go wing it a little bit where I kind of lost all my data folders and everything. But hey, we still got everything.
We have
Obviously we're still in a. I was gonna say, obviously, we're still in a pronounced downtrend here in the market, just in general. And this 430 level, I know, I kind of messaged you about this. I think it's an extremely important level because it's kind of like this pivot area, right? So you're coming off those October lows there back in 2021, and we're seeing a lot of activity there from a put side. And it's kind of the first major strike, right? So if we kind of clips through this strike, we have potential to go all the way down to 400 there on the SPY, where the March peak put is. So, if they want to get really aggressive selling here into March, into OPEX, 400 is probably your level to look for a kind of a end to the capitulation of a downtrend, or at least for March. We're still in a seasonality perspective here, in a pretty bad perspective. From a seasonality standpoint, you don't really see much of upturn in the markets until about mid to late March, as we head into April, which is a very seasonally bullish month. So that's kind of where we're at right now. I mean, as a firm, we have been, a little bit more put heavy to neutral on types of positions. We're usually, as you know from other events, we're an aggressive long premium strategy type firm, and we're putting on a lot more selling premiums and kind of pair trades as well.
All right, so the 430 level / 4,300, if you're looking at your futures in the S&P, that's your bogey on as far as support goes, or I guess current support could become new resistance down the road. Do you? It may seem like a dumb question, but is there a level on the upside you're watching, or not really?
Yeah, so I was looking at around 440. So we want to see us be able to move through that 20-day moving average, and then we have a chance at taking out that downtrend there.
Okay.
But you still have tons of levels overhead. You still have the 200-day overhead, and you still have the 50-day, obviously, and other moving averages that are just sitting right overhead. So it won't be easy to get through it, but obviously, I think we're talking about there's a sentiment case that we are probably getting close to. A market bottom. We could see another flush out as well.
Walk us through that case a little bit here.
Yeah, so there's a couple things here. First off, we have the investor intelligence chart here. Typically, what we look for is moves below the 0 percentile range. So the percentage of bulls actually kind of fell this week to 29.9%. The percentage of bears rose to 34.5%, and then we're finally through, like I said, we're down to about minus 4.6%. It looks like on that bulls versus bears. So when we look at this from like a percentile type basis of all time readings, I believe the data might be from 1972. We're in the 15th percentile. So when we run kind of quantitative back test on this for when we kind of get through these levels here in the 10 to 20th percentiles, 1 week out, the market's on average kind of down still, but only minus 0.16%. 2 weeks out, we're actually seeing a positive return of 0.71%. 4 weeks out, we're over 1% return. And then 8 weeks out, we have over a 2.34% return when we see these types of moves on a sentiment basis.
I got to admit, this is not an indicator that I really know anything about.
And in general, sentiment indicators, they work well to some extent, but obviously, when are they going to fool you, right? They're going to fool you at the big pivot points when you go from a bull market to a bear market. And it's kind of too early to call the bear market just yet. Is this just a dip, or is this a major bear market that's starting on the horizon? There is other cases here that I have on a sentiment basis.
Yeah,
I have. I don't know if you do look at the NAM index for the active investors at all ever.
Again, I gotta admit, I don't. But tell me, I want to know about it. So tell me about it, because I'm all about learning new indicators and indexes. So
Yeah, so from like a broad macro theme, this is another one that I kind of look at here. We look for tradable bottoms around this minus 40 percentile 2-week change. As you can see here, there's many bottoms that it kind of marks on a macro basis. I call them tradable bottoms, but we once again finally just got this minus 40%. The percent rank all time right now for this week's reading was actually in the 10th percentile. This is a pretty extreme reading. It was 28.71, I believe, that it came in at, or 30.3.
What is this? What is the name exposure index? I don't even know.
Yeah, so it's the National Active Advisors Investment Management Exposure Index. So these are active strategy managers, and they're taking the survey on a weekly basis. And what they're doing is they're telling you basically, are they bearish or bullish? Are they leveraged on the bearish or bullish side? So it comes in readings of 200 all the way down to minus 200. And this is kind of how we get it. So this is another indicator. And again, these things aren't, end all be all indicators. Typically, when you see a market bottom, it could be all the way up to 4 weeks from it. But it's just kind of telling you that, most likely is, the pessimism within market participants kind of getting washed out right now. So we're starting to see that. The biggest thing about, go ahead, Spencer.
No. I was just saying it's so interesting because there's so many different, the market can be divided into so many clicks, that this index is measuring a specific group within the overall market, albeit a group that commands a little bit more capital than what you may see on Twitter. But I would love to just get one day, maybe Matt, we can just do a side by side of all the different sentiment indexes, and just compare them just to see what everyone's saying at the exact same time. But if you're saying that the sentiment indicators are turning bullish, I don't know how I feel about that.
Yeah, so that's the one thing that a lot of people put this content out there and they're saying they're turning bullish. But what do you really need for that bullish kind of contrarian outlook, right? We really need a catalyst. And that's something that we're just lacking in the market. We don't really have a catalyst to give us a bullish signal just yet. Some may have thought, like with Jerome Powell saying, he's not going to be as aggressive in rate hikes, it could have been it. But I think, the fact that the Ukraine-Russian crisis just kind of overweighs that, right? With the inflation perspectives as well. So that's kind of the big, I guess, standing point for me is we just don't have a catalyst yet. So everything's ripe for it, but you need to have a catalyst before you can act on it. And obviously, from looking at the SPY chart, the technical levels, it's still kind of in no man's land to possibly even close to breaking down.
So, let's keep going here, Matt. I want to see some more stuff you've got.
Yeah. So another thing that we kind of would look at here is, look at the VIX. The level that we've kind of been watching and we've seen within the volatility index is, when we get these moves below 30, we kind of get these rips in the market. And above 30, you're kind of more in a risk off move lately. And the big reason is we're in backwardation. So we went through a backwardation period here in the end of January, and now we're back in backwardation here, beginning in about mid-February now through March. So a lot of the times, managers often use this as a signal to get long and buy the dip. But as you can go out and we can look back, backwardation can hang on for quite a while. So you go back to March 2020, backwardation continued on into extreme levels. So I don't think it's necessarily time to, buy the dip yet without any kind of catalyst. The VIX is still telling you that we're in a risk off move here. And, on top of that, we have, oil prices now cresting towards, levels that we haven't seen since, what was it? Pull this chart up here for you.
I mean, COVID, right? No.
Yeah. Even before. So 111 is the area that we kind of have defined as a resistance zone area. And that's because, that was that kind of 2013, 2012 levels. And, we can go back even further here. So if it wants to hold above this kind of 111 level, let's just take a look. We do have upside room to 140 on this still. When you're looking at this, we'll make it a little bit nicer. But, so I think the pressure on the market right now is obviously inflation. And that would be, I guess, the only way to kind of, well, there goes the chart. So again, I've been having a little bit of technical difficulties. Sorry about that.
Sorry, I can always pull up my chart if need be.
Yeah, no. So we could just keep it here as is. I guess with the daily, it doesn't look as great, but so as long as we keep above this 111 level, I don't know if it's a blow off right here or not, but if you can stay above this kind of 111 level, there is chance for further movement upside. If we close below it, obviously we have kind of a trade that we can get on the pullback side, because it does seem like it's a blow off top. I would think that it would go down to, mid to low 90s. That's kind of where the first Fibonacci retracement level is. So obviously, we've seen this now move in. It doesn't matter if it's, oil. We've seen it in, gold. We've seen it in miners. This kind of blow off type move through these highs.
Matt, I just want to know, like, let's just zoom out for a second. You're CMT. I would love to know how you approach the market when you get a situation like we had last Thursday, when all of a sudden there is a major ground shaking geopolitical event, and the only thing that matters is the next headline. And we're arguably still in that. I think we are still in that zone right now, where we are just waiting for the next headline. Overnight, we got the attack on a nuclear power plant, and who knows what comes next. So, but as a technical guy, how do you deal with the fact that we are just in this zone where headlines are everything? Because it's not always that way. There are times when there is a vacuum of macro drivers, but that's not right now.
No. So how do we deal with it at this point? We kind of just have to follow the technicals from a standpoint of, and how do you deal with it when you're kind of having that bits of volatility? So we are primarily swing traders. From a personal trading standpoint, how I deal with it is, obviously I do a lot of intraday trading for myself as well. Mm-hmm. That's about the only way that you can really kind of stave off this control. Otherwise, some of the best opportunities, have been on the short side. And I know a lot of people have been hesitant to get short at times because we're so conditioned to buy the dip right now as well. So as of right now, you kind of got to look for those short opportunities. In options, it's been really tough because you have these high implied volatility levels. So you're paying up for the risk, for the premium there. So a couple of ways that you could do it is you could sell premium on the upside, above, possible resistance levels is a good way if you're looking at options. Otherwise, you can just take straight out shorts if you're willing to pay the margin on that as well. Another thing that I do is, I'm directional trader for the most part, but through January and February, I have been putting on a lot more pair trades. So, got pair trades on, I've had them on oil, I've had them on financials, I've have them on home builders, because, you're maybe near a critical support level on some of these at times, but it also could be a period where it's going to break down. So it's a way to protect yourself. So you're not going to see as big a gains out of these, but it's a way to keep yourself kind of neutralized within a market that's trying to find direction.
Can you go into more detail on those pair trades? Like what?
Yeah. So one pair trade that I had on recently is the Wells Fargo trade with Citigroup. The reason why I stayed with Wells Fargo is because it was in a nice kind of uptrend. I don't know if my chart will work here.
Yeah, I got it. Okay, give me a second. Give me is that Wells?
No.
All right, I got it. All right. Perfect. So we got Wells versus Citi.
Yeah, Wells versus Citi.
All right, cool. All right, daily. 1 second. Cool. All right. Tell us what you saw. I don't have any indicators, so sorry, but tell us. I can add them if you want.
No need. So Wells was in this solid kind of uptrend area. So it was looking like it was trending in the right direction. I put this on probably somewhere back in, it was about mid-February, right? So I didn't know if you had a chance of a potential breakdown or if it was going to bottom again where it was coming off of that top trend line that was connecting higher or higher highs. So it kind of broke out of that and it was holding that level.
So I'm just getting the, there we go. Okay.
No problem.
So you're referring to the, yeah, if I get the city off there, you're referring to what, like the 46 or like this trend line? Is that?
Yeah, correct.
Okay. All right. So as long as it held and it bounced there. Oh no, it's below it now today, I think.
Yeah. So, and this is why you put the pair trade on.
Yeah.
You know, and Citigroup had, you know, more exposure to Russian and international assets.
Yep. I was also reading that.
That was a big reason for the put trade on that side. And that, you know, obviously, you know, banks were looking all very similar, but Citigroup looked like it had more potential to break down. So just a way to kind of neutralize the situation, because obviously we had a 10-year that was rising and, you know, the one thing that I did see that was kind of odd was, you know, one of the biggest things that has been happening is, you know, throughout the past few years, the yield curve on the 2-year or the 10-year minus the 2-year government bond, right, has been fairly correlated with the banks. So this is the 10-year minus the 2-year with, I got the KRE on here because it was kind of looked really good, but it's just banks in general. But that started diverting. So we started getting this big divergence in it. And so I said, you know, there's potential risk here for even banks on the downside, which, you know, most people didn't think that could happen necessarily because of, you know, how the 10-year has been acting in itself in a very bullish manner. And, you know, kind of now we're finally starting to see the 10-year is now starting to struggle here with this conflict in Ukraine as people have a lot more fears going on. So they're starting to get a bid in bonds. So that was kind of the reason on the put side of the trade. There's also a lot of other drivers that we use, obviously over at Schaeffer's. I think we've talked about them in other shows. You know, we're looking at volatility, we're looking at put call ratios, and these things are just kind of lining up that Wells Fargo was more positioned on a bullish side and Citigroup was more positioned on a bearish side from that standpoint.
Can you take some tickers from the chat, Matt?
Yeah. Take a look. I'm not sure if my platform is going to cooperate today.
Yeah. Well, let's try.
Time.
Buglog wants your thoughts on American Airlines.
American Airlines. Let's see if I can just pull up a chart quick here.
Yeah, I got it. In any case, if you don't have it, I got it. Right. We'll zoom out here. Get a nice daily going.
Yeah, so the first thing that I see on American Airlines is you really kind of need to hold that. It looks like about $13 level there on your chart there, Spencer.
Yeah. Well, what's that low? That low is 1440. So you're referring to?
Yep. That it looks like October highs of 2021. That kind of level where that gap is. So that gap, I'm going to guess, was on an earnings report. Can't fully tell with the chart itself.
You're referring to this, that gap. This is October 21 right there. That's October 20.
October 20. Yeah.
Okay.
So we're going to want to hold that kind of basing level there because obviously we're trading already down near there.
I mean, we're in this like December of 2020 here. No, I know we're not.
Yeah, correct. So that $14 level, you know, obviously if it breaks down through there, you got more downside. If you're looking at getting long on AAL, you know, my piece of advice would be you could take a shot, you know, kind of down there in that $14 range, obviously, but you need to see confirmation breakout to the upside. I don't think that airlines are necessarily a bad situation to be in. You know, we are kind of opening up more. with the economy. And I do think that we're going to see more and more travel. I think I might have talked about this. What is kind of happening, I think, with oil in itself as well is, we have this increasing on demand happening with a supply shortage. So I do see that, there is an increased demand for travel as COVID levels now are at record lows. So airlines is something that I've been looking at. I know us as a firm, we've traded hotels recently to some success. I think we might have just been stopped out of one position today that we took recently, but we've had a lot of success with like Hilton and Hyatt, and directly kind of correlate towards that is really the airlines. Now, obviously with the hotels, you can do that, traveling through car, but obviously with all these restrictions that are coming off, I think the airlines are going to come back here once we can find, a broader market bottom in itself too.
Matt, tell the people how they can find you and get more of your insights and analysis.
Yeah, you can come find us over at schaeffersresearch.com or find us on Twitter. I'm always posting charts. It's Timpane, so it's Timpane. Or you can go to @SchaeffersResearch on Twitter as well. They're always posting great content and reposting a lot of our trader stuff. And just feel free to reach out anytime. I will DM you back or message you back on a reply on a post or anything. So,
all right, Matt. I look forward to our next segment. Hopefully, things are looking a little bit different by then. But hey, can't argue that it has been interesting. So, Matt Timpane, Senior Market Strategist, Schaeffer's Investment Research. Matt, thanks for coming on today.
Yeah, have a great day, Spencer.
All right. And on that note, everyone, we are done here because Benzinga Live is about to start. So before I go, want to remind you all that today's show is sponsored by Ticker. It's the company that is connecting consumers and shareholders, revolutionizing how everyday investors are rewarded for brand loyalty just by owning stocks. So we got a video. Can we roll that video, please?
What is Ticker? That's right. Ticker with 2 I's, just like you, because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering.
All right, TIICKER.com/Benzinga, link on the screen. Check it out. Open an account, connect your brokerage. When you confirm your account, there's a little box. It's like, the box says, are you from Benzinga? You say, yes, I'm from Benzinga. Check that box, do all those things. And within 30 days, Ticker will send you a $20 Amazon gift card. Check it out. Ticker.com/Benzinga. Thanks to all of our guests today. Thanks to Scott Kaufman from Creek Road Miners, Brian Cox from SurgePays, Marc Cercos from MetaSoccer NFT, Luis Marchand from Flora Growth, and of course, Matt Timpane from Schaeffer's Investment Research. Thanks to all of you for hanging out with me here in the chat. No, you can't actually buy tickers on Ticker. It connects you with so for example, you own Starbucks, you get some free Starbucks. That's how it works. It's a pretty neat idea. So check it out. We're done. Please remember, all the information from this show is meant to be used as informational purposes only, not for investing or trading advice. And once again, as a reminder, this is a paid show. It's one of the ways we monetize our YouTube channel here at Benzinga. So all the companies that were on today's show paid to be here. They just did not know what we were going to talk about. They had some ideas, but hope you had fun. I will see you guys over on Benzinga Live, which starts in like 2 minutes. So this stream will end, redirect over there. I'll be live with Aaron Bree. We got a big show today with a fun remote segment planned. It's going to go horribly wrong, probably. So stay tuned for that. Everyone have a great rest of your day. And let's close out. Let's close this out, Aaron.